Welcome to the Tech Corner. I'm Rick Ducat, filling in for George Tillis. The computer chip maker Nvidia recently became the first company in U.S. history to pass the $4 trillion valuation mark. This highlights the ever-growing role that the semiconductor industry plays in artificial intelligence, technology, and really most aspects of life as we know it. But today we'll focus on another U.S.-based chip maker that, in some ways, was the Nvidia of the 1990s, Intel. Trading under the ticker INTC, Intel is best known for making microprocessors, for example, the primary computer chip in a laptop or a smartphone. It's been a remarkable turn of fate for a company that once, like the Nvidia of today, not only dominated the industry, but also reigned as the most valuable company in the world. Once the king of the market, INTC shares saw a dizzying climb in the late 90s and more than quadrupled in about 2 years. But by the end of the year 2000, the dot-com bubble burst, sending shares plummeting more than 83% from almost 76 to just below 13. At this point, Intel shares have been under pressure for years, falling about 66% from notable highs near 68 about 4 years ago. The company boasted a market cap of $509 billion at its peak versus only about $102 billion today. However, this tech titan may be down, but it's certainly not out. In fact, shares are up more than 30% off the April lows after holding on to a key long-term supportive area. So in this edition of Tech Corner, we'll dive into Intel's major operations and how its new leader plans to help restore this once mighty chipmaker to its former glory. Intel will report earnings on July 24th as traders await the latest results from the company's new cost-cutting, efficiency-first business model. Former Cadence Design Systems CEO Lip-Bu Tan became the company's 9th CEO in March, and he made his plans for change clear right away. In a message emailed to all Intel employees on April 24th, he said that the company's culture is too slow, too complex, and too set in its ways. The note highlighted plans to trim bureaucracy and administrative work, reduce hurdles for decision-making, and also required employees to be on-site 4 days per week by September. However, it also said the company needs to make hard decisions and critical changes to reduce the size of its workforce. Intel has largely lagged in the AI technology race, losing ground to rivals like AMD and Taiwan Semiconductor. However, the company has plans to entice AI designers like Nvidia and Broadcom with its new chip manufacturing processes. According to a Reuters report, it also plans to produce its own Panther Lake AI chips later this year. And don't forget as well that despite the recent hard times for Intel, its chips are still an integral part of many major desktop computer and laptop brands like Lenovo, HP, and Acer. Intel's Xeon series processors play a major role in Nokia's 5G network expansion and additionally are used by AT&T, T-Mobile, and Verizon. Outside of mobile devices, Intel is involved in automotive technology after spinning off the autonomous driving company Mobileye through an IPO in 2022. Intel still owns a majority stake in Mobileye, but earlier this month sold 63.7 million shares worth about $1.2 billion. Speaking anecdotally, I've been obsessed with computers since the time of the Apple IIc. I very clearly remember that during the 90s, Intel was unquestionably the name in computer chips. And one big reason for this is that they had a partnership with Microsoft Windows, referred to as Wintel, where Windows computers would use Intel's processors. These computers often were prominently branded with the famous Intel Inside logo, helping to make the company into a household name. So it's hard to overstate Intel's dominance during this time, as you can see on the chart. So if we were to look at our longer-term Intel chart once again, we can see that shaded area from about 2018 to 2022. That's where shares made an attempt to recapture those old highs above 75, but it didn't quite make it. The second attempt fizzled out. We saw a big decline and a retreat to an important range. The area between about 19 and 25, our green and red lines there, were frequent high and low points. You can also see the volume profile for this long-term chart shows this range as being important from a trading activity standpoint. Nothing else really compares except for the very old trading activity in the late 80s to early 90s. So this is a key long-term area to hold. There's not too much to break our fall if we start moving too much lower. To move to a more granular look, a year-to-date one-day chart, we can see that the 19 level is where price mostly held, but the actual intraday lows came in at about 1767. More recently, price broke above some old highs near 2250, our green line, and after some fluctuation, made another upside push. But now, price is stuck near the confluence of the old highs near 2390, our red line, and the purple 252-day exponential moving average a bit below 24. Also consider that price is forming a rising wedge type shape, typically regarded as a more bearish pattern here, but really it can go either way. What you'd be looking for would be for price to break beyond one of those two boundaries here. Notice as well that the RSI is showing some bearish divergence here. The price is still climbing, but RSI is not really making new highs along in tandem with these higher closing prices, typically regarded as a sign that the momentum of the price action is starting to slow. To overlay a couple more studies, resistance becomes even more prominent near these current levels. The +1 standard deviation channel, based on this year-to-date chart, comes in near 2350 or so. For support, there's a volume node around the 2223 region that lines up with our 21-day exponential moving average support. Beyond that, we've got our trend line, our linear regression line, and our 63-day exponential moving average, all in confluence around 2170, so some key areas there to monitor. Intel's rocky road amid the artificial intelligence boom gives perspective on how rapidly the already challenging landscape has changed for chip makers, especially for those who have been slower to adapt. It's also an interesting and rather harsh reminder of how fortunes wax and wane in the market. Nvidia holds the crown that the now embattled Intel once wore. But for how long? That's going to do it for Intel. Next week on Tech Corner, we'll stay in the semiconductor realm, but turn our attention to Marvell Technology. This chipmaker focuses on data infrastructure products. And much like Intel, Marvell is also fighting for its place amid an increasingly crowded field and looking for AI solutions to fuel further growth. Remember to like and subscribe to Schwab Network's YouTube channel for more Tech Corner content. I'm Rick Ducat. Thanks for watching.